10 a.m. right here at Lagos, Nigeria. Good morning, good evening. Wherever in the world you're watching from, it's Business Morning live on Channels Television. I'm Ladi Williams. First off, let's take a look at what's happening in the markets. We see major markets are rattled this morning, and the oil market is not left out. We see prices quite volatile ahead of a meeting of consumer nations to discuss a new release of emergency oil reserves alongside a huge planned release by the United States. U.S. West Texas Intermediate crude futures dipped about 6 cents to $100.22 a barrel after trading as high as $101.75. The contract slumped about 7% on Thursday. Brent crude futures rose 5 cents to $104.76 a barrel after dropping about 5.6% yesterday. The May contract expired on yesterday at $107.91 a barrel. The planned U.S. release caused yesterday's fall. Today, the two benchmark contracts were each headed for a weekly loss of around 13%. That's their biggest in 2 years. International Energy Agency member countries are set to meet today to discuss a further emergency oil release that would follow their March 1st agreements to release around 60 million barrels. And the Organization of Petroleum Exporting Countries and its allies, including Russia, have agreed to another modest monthly increase in oil output. At the end of the meeting held yesterday, OPEC Plus announced that it will raise output by about 432,000 barrels per day in May, while resisting repeated calls by the West to pump more crude to cool prices that have risen to all-time highs. This comes as a group of oil-producing countries decided to stop data from the Paris-based International Energy Agency, replacing it with reports from consultancies Wood Mackenzie and Rystad Energy. Meanwhile, OPEC Plus has warned that the global economy will see a major blow from a prolonged conflict between Russia and Ukraine. And back here, the Federal Competition and Consumer Protection Commission says it is engaging all stakeholders across all sectors of Nigeria's economy to continuous efforts to ensure accountability for Nigerian consumers. The Executive Vice Chairman and Chief Executive Officer of the FCCPC, Babatunde Urukera, stated this at a gathering in Lagos while briefing newsmen on its role in protecting consumers in the country. Do take a listen.
We continue to analyze mergers and acquisitions in a manner to be sure that we're not creating enterprise that would ultimately distort the market and exploit the people. From a consumer protection standpoint, we're engaging across the board, across the sectors, and showing up everywhere in ways that lets everybody know that there is an accountability framework, and what you're doing may be subject of scrutiny and potential accountability. There were products whose shelf life was expiring that many distributors were liquidating and pushing into the market. Some of them have learned a lesson and will never do that again. And so that was our work in the fast-moving consumer goods sector. A few investigations that have opened in those sectors. Some are closing and ending in significant penalties. Some are about to close and will end in significant penalties. One of the most important factors in pricing in a place like Nigeria is transportation and other logistics. The vast majority of what we consume is imported, and imported from the Far East, precisely China. And so we opened an investigation into shipping towards the end of last year, raided 5 shipping companies, strongly resisted again as usual. That investigation is still open and even still at early stages. But key competition investigations do take a lot of time. But the point about our interventions is not necessarily when the investigations close. It's just that you're doing something at all.
And let's dive into our first conversation now. We see experts estimate that Nigeria's agricultural sector, which provides nearly 1/4 of the country's GDP and employs 2/3 of the labor force, and has the potential to generate $40 billion in exports, or using electricity to power opportunities like these can drive a virtuous cycle for rural development by increasing incomes and community resilience and improving the financial performance of the mini-grid utility. The Nigerian Rural Electrification Agency, in collaboration with RMI and supported by the Global Energy Alliance for People and Planet, launched the Energizing Agriculture Program. Well, to tell us more about this, we have Engineer Ahmed Salihijo, Managing Director of Nigerian Rural Electrification Agency. Great to have you on the program. Good morning.
Hello, good morning.
Good morning, Engineer. Well, it is estimated that Nigeria loses over $9 billion worth of fresh produce due to a deficit in its access to power to drive agro-allied processing. How can Nigeria bridge the gap, between agriculture and electricity access?
So thank you very much for having me here today to speak a bit more about this excellent partnership that we're having with RMI. This stemmed out of our last visit to COP26, where Nigeria has committed to global practices of ensuring that we take up our nationally determined contributions. So this was seen as an opportunity, and it creates a nexus for us at REA because we're trying to take power to unserved and underserved areas, which certainly our agricultural clusters fall into that particular space. So what we're doing currently, as the name suggests, with Energizing Agriculture, the REA is acting here as a facilitator and an enabler, to see how we can bridge that gap by providing productive use of power through mini-grids, isolated mini-grids, or solar pumps for irrigation for the agricultural space. And we're not doing this alone. We're doing this in collaboration with the Federal Ministry of Power, who supervises our activities, and also with the Federal Ministry of Agriculture and its various stakeholders, where we work with RMI so that we can develop that space and bring up these mini-grids to see how we can bridge that gap, just as you have mentioned. And because it's also quite a time-sensitive activity, we're looking to do that within this year to see how we can begin to scale up before we go far into the farming season.
Yes, quite a time sensitive. But what is the state of mini grids in rural areas at this point?
So within the rural areas, I can comfortably say that we have done just at the REA alone, almost 100 megawatts of power through mini grids. But the issue is that we look at it through various programs that we have. So we look at it through the capital projects, which I can proudly say this year we are designing a specific program around agriculture, in a programmatic approach, knowing that we had made this commitment with RMI. We needed to also bring in other programs that would complement the kind of expertise RMI is bringing to the table. And as you're also aware, we have the Rural Electrification Fund, where we have been, partnering with private developers, providing them with grants to provide mini-grids in a sustainable fashion, and also with the Nigerian Electrification Project through the World Bank and the Africa Development Bank, where we're currently providing up to 60% subsidies for mini-grids within the agricultural and rural development space. So overall, I believe we have seen areas where, for instance, in the southwest part of the country, where, these mini-grids are evolving into ensuring that some other activities crop up around it, like rice mills, etc. So I think it's becoming very obvious and clear that with the provision of this sort of power, through isolated mini-grids, it does help in bringing this kind of economic activities.
And an alternative is actually much needed at this time. We've seen energy prices, skyrocket globally. But I want you to tell me more about this Energizing agriculture program. How's it going to work?
So with the Energizing Agriculture Program, the REA and the RMI, are currently working on the feasibility of these programs. So the good thing is that because we have other partners, so for instance, as I mentioned, we have other partners with the developers through the Nigerian Electrification Project, the Rural Electrification Fund, and the Capital Project. We are now working closely with RMI, the Ministry of Agriculture, and the Ministry of Power, to continue to design these programs in such a way that they continue to be private sector driven. So with the partnership that we have with these other stakeholders, what we intend to do is to bring up and create the demand in the agricultural space. So we have a very close partnership with the Federal Ministry of Agriculture, where we are working hand in hand with them to identify various clusters that require this sort of service, so that we can now bring up these solutions, and the private sector, in collaboration with the farmers associations, would be the one responsible for, after the program rollout, to continue to sustain them, because already at the REA we have an ongoing model for the Rural Electricity User Cooperative Society. So we intend to bring this as well to the table, so that we can jointly now bring up these projects, understand the demand, and then continue to do operations and maintenance over the lifetime of the project.
Well, most times, people see cleaner alternatives as, quite expensive, but how affordable and accessible are these, mini-grid options to dwellers in the rural areas?
What we believe also is a good model in agriculture, and we have seen this work with some of our already existing developers. They also go into partnerships with consumers in terms of the association. So sometimes what you find is that they can actually pay for this power with produce that they have from the farm. So in this case, as we are aware, we have various programs within the central bank that also partners with farmers for the anchor borrowers. So what we have been seeing is that in terms of affordability, they are actually able to pay with produce of the farm that they have. So we have this as a win-win situation, and some of the associations like the rice farmers associations and the cassava farmers association, they have all shown interest that they are able to go into this sort of partnerships with our private developers. And as we are aware, as they consume that power, they only pay for what they consume, and they are able to do so with the produce of their farm.
All right, so according to the Rural Electrification Agency, that's you, and the Energizing Agriculture Program, it's supposed to foster a pipeline of local agriculture energy projects, that demonstrate the impact of collaborative development efforts across the energy and agriculture sector. But how is the program, designed to ensure local ownership, of solutions and scalability?
Yeah, so everything that we do is anchored around the local content of this. So for instance, as I mentioned, when the private developer comes in, they actually work directly with the farmers associations, with the local community through the Renewable Energy User Cooperative Society. So the entire program is designed around, the local community, and the major reason why the REA even went into this sort of partnership is because, in the last few years, we've been trying to continue to see how, we look beyond having only electrons. So we want to look beyond that. We want to see how that power is directly affecting lives, is directly creating jobs. So this is why, we know that within the agricultural sector, this is a very, very natural nexus. So, but as you have said, this is how we want to concentrate on this program, to work directly with our local dwellers, so that we are able to ensure that this program remains sustainable. But as you know, we are only launching it today, so we are going to use the next month or so to ensure that everything that we've put in place, we have started to implement with our partners.
So, what are the most, looking at value chains now, what are the most promising agricultural value chains to actually electrify Nigeria? And how do you plan to collaborate with, agriculture and energy stakeholders?
Yeah, so as you know, I'm not an agricultural expert,
Right.
So this is why, I believe the partnership with the Ministry of Agriculture and its agencies. And to be honest, what we look to do is we don't want to recreate anything. So we are working with them to identify where we already have this sort of economic clusters and this sort of activities, so that we can go in there and see how we can augment or how we can complement those services. So this program is not going to necessarily begin anything from the absolute ground floor. We are looking to build on the foundation that our stakeholders have already done within the agricultural space. So, but from my understanding, I know that there are quite a lot of rice mills around, that are already under various programs in the federal government of Nigeria, which we intend to see how we can partner with them and continue to boost their energy demands.
Yeah, quite a long value chain there to actually electrify. But, beyond providing electricity to the unserved and, underserved communities in Nigeria, what's the ultimate goal for, the Rural Electrification Agency, under the Energizing Agriculture Program?
For us, the agricultural sector is dear to our hearts, because, out of, all the other programs that we have been doing, I think this is by far going to be one of the most impactful projects, because, naturally, you're killing a few birds with only one stone. So what you have is that you are empowering the rural community. At the same time, you're providing them with activities that will enhance their livelihoods. You're also providing food and resource for the local community, and at the same time, impacting the economy. So for us, it's a very fantastic opportunity to come in, deliver our mandate for serving the unserved Nigerians, and at the same time boost the economy by providing this sort of service and ensuring that the lives of our rural dwellers have been enhanced.
Quite a lot to do there, Engineer Ahmad Salihijo, but you'll just hold on. We'll take a break now. When we come back, we'll dig deeper into this conversation. That's the moment. Do stay with us. Welcome back. Still watching Business Morning. We've been talking about the Energizing Agriculture Program. And I still have with me Engineer Ahmad Salihijo right there in our Abuja studio. Thank you so much for staying with us.
Thank you very much.
All right, Engineer. So, what are your plans, on sustainability, towards making sure that these off-grid projects and initiatives actually benefit the rural communities?
So I think our major plan for sustainability always remains driving these projects through private sector participation. What we have learned within the rural electrification space is that if you design it in a commercially driven environment, the private sector proponents running these projects also bring up their own risks and equity onto the table. So everything government has been doing so far with the Rural Electrification Fund, with the Nigerian Electrification Project, is to provide the required subsidies and grants that these private sector developers require to run this program. So what we have learned is that when you have the private sector driving these projects, because there's already an economic viability aspect attached to it, these projects have an opportunity to be operated and maintained for quite a long time. And in addition to that, because of how this program has also been designed in partnership with other stakeholders, we believe that the structure that we have put in place, especially with the rural electricity user cooperative society structures that we have, our partnerships with the farmers associations. On the whole, this program has been designed so that it remains sustainable even after it's been delivered to these economic clusters.
Quite interesting. I recall, at some point, access to gas, was a major constraint for investors as it reduces the, utilization of the installed capacity of gas-fired off-grid power plants, which actually depletes their projected cash flow. How's this being handled?
So far at the Rural Electrification Agency, we haven't had much gas-fired initiatives. We have been working mainly on solar hybrid mini grids through, solar home systems, solar mini grids, as I mentioned earlier. However, we are looking at, besides gas, we have a program under the Rural Electrification Fund called the Research and Innovation Hub. So we are trying through that program to see how we can also bring in other technologies, such as small hydros, such as waste to wealth management, such as methanization in various parts of the country. So we've been able to put up a few pilots which are just being implemented as we speak, so that we can learn how these projects can actually be used for rural electrification. And then when we do that, we are now in a better situation to partner with other government stakeholders that are currently mandated with, managing, other sectors within the country. So I think, for the gas-fired, we haven't done or we have not really explored it as much as the other technologies that I have mentioned.
Okay. All right. All right, Engineer Ahmed Salihijo, MD Nigerian Rural Electrification Agency. It was great having you on the program today. Thank you so much, and enjoy your weekend.
Thank you very much, and it's good.
Thank you. All right, now let's turn our attention to Nigeria's automotive industry. Well, owning a personal vehicle is of economic importance. Next to housing, transportation is often the second largest expenditure for the majority of urban households anywhere in the world. But insufficient purchasing power among middle-class Nigerians, coupled with limited or no access to vehicle financing, puts cars out of reach for over 90% of the population. Joining us now is Timi Tokwe Ologunoye, COO, AutoCheck Africa. Great to have you on the program. Good morning.
Good morning, Ladi. Good morning, viewers. Happy to be on the show this morning.
Great to have you join us. So, in many countries around the world, the automotive industry plays both a strategic and, catalytic role in economic development. For you, what measures can be taken to transform, Nigeria's automotive industry and attract investment into the sector?
Yeah, thank you very much for having me speak on the subject matter. I think the Nigerian market for automobiles is really very massive and can readily sustain an automobile industry. According to our Vice President some times back, he said that the country's annual vehicle demand, for example, is at about 720,000 units annually, and the local production that we have has only been able to reach up to about 14,000 units. So this just represents, let me say, about 2% really of capacity to actually satisfy the massive need that we have in Nigeria. So it therefore means that we have like, say, 706,000 units that we have to source from outside of Nigeria, either by way of imports of maybe new cars or pre-owned cars that we popularly refer to as Tokumbo in Nigeria. As a nation, really, I know that we have produced in the past about 150,000 cars annually. So in all honesty, all the tools, all the mechanisms are really there. And like you said, the only missing thing in the puzzle is auto financing. And I think once financing really comes in, sales will begin to grow. The production capacity of local assemblers will improve, and the sector will really become very attractive for investment. So
right.
It therefore really means that the market size for automobiles in Nigeria can easily even reach like 1 million units annually if there is really an affordable vehicle credit purchase.
All right. Talking about,
right?
Yeah. Talking about financing now, it seems the car financing culture is struggling, to take flight. What do you think are the challenges here?
Well, I would think that it is safe to say that without very strong financing schemes, really, the growth of the sector cannot really be fully optimized or achieved. In your introduction, you were talking about the insufficient purchasing power among the middle class. And in reality, next to housing, transportation is often the second largest expenditure that really takes money out of people's pockets. And in developed economies, really, car loans and vehicle financing schemes really help people to be able to spread their vehicle purchase payments over several months, even years. Unfortunately, in our climate era, it's still very nascent. Even the available loans are significantly very costly and inaccessible. However, I must really say that this has improved significantly in the last 1.5, 18 months, 2 years, especially from the time that we at Total Check actually started trying to solve problem in the sector, really. So the fact that we have been able to now create an auto loan marketplace where the banks and all the other financial institutions, microfinance institutions, digital lenders are now able to compete for customers. We are beginning to see a trend where interest rates are being driven down. More people are now able to get access to financing to buy their dream cars, whether they are salary earners or even if they are SME businesses, really. Today, there are banks on our platform who are actually providing credit facilities that are running into billions of naira monthly. In the March that just ended yesterday, for example, a bank actually provided credit facility in excess of 500 million on our platform. That's about $1.2 million. So we must also recognize the fact that we are making progress as a country, really. So the general consumer lending has virtually increased across board now. Banks are now being able to see consumer lending as a viable business. I must say thanks to the CBN's initiative to continue to make financial services sector more consumer friendly now. And I just believe that things can only continue to improve. So these are the areas that we are beginning to see, and it's giving us confidence to continue to invest in the sector. Okay, and I really think that other service providers too can also invest and participate in the auto sector.
Right, and I saw, a couple of companies, getting that buy now, pay later model into car sales. How's that catching on?
Yeah, I think it's been catching on like wildfire. I must really be honest. We had not even anticipated the level of embrace that we had actually experienced in the last couple of months, especially in Nigeria and some of the other African markets where we really operate. I think prior to now, most of the banks and financial institutions shy away really from providing credits on Tokumbo vehicles. They would rather just provide credits for new cars. But in reality, new cars is just about 5% of the cars that are driving on the roads. Now, unlike when the banks are providing finance on only these new cars, We have now been able to use the auto-check technology, for example, to boost the confidence of our financial partners, about 70 of them, for example, providing credit on our platform, to be able to provide reasonable interest on these Tokunbo cars to Nigerian customers, right? We bring in our technology, use our 150-point inspection methodology, use our artificial intelligence, machine learning-driven credit decisioning tools to advise them, even on the residual value of the car, the vehicle condition analysis. And then in the case of a customer default, they now have confidence that we can also launch these vehicles back to our auction and recover principal and interest outstanding for them. I really think this is really increasing credit penetration now, making credits available on these Tokunbo cars. A lot of this progress is being made, and honestly, I must say that we continue to be well beyond our expectation at the level of penetration that we've experienced in the last 12 months.
Quite interesting, quite interesting. Well, the National Automotive Industry Development Plan, was deployed to revive vehicle manufacturing and a component and parts. But how do you see it so far?
We for example, at AutoCheck, we ran an auto summit sometimes in February, where we actually brought together all the players in the automotive ecosystem, including the Director General of NADDC, the President of Association of Motor Dealers of Nigeria, still trying to fix the puzzles around this problem with local assembly and production capacity in Nigeria. So the truth is that even though these different stakeholders and parties are speaking from different sides of the divide, I must say that significant progress has actually been made with local assembly of automobiles in the country, and we must really commend some of these local assemblies for making these huge investments. And even for a savvy businessman like Dangote, for example, to have entered into the sector actually shows the potential that is in there that can actually be milked. And like every policy or plan, I just think that the NAIDP requires some form of periodic review, really. Stakeholders need to continue to regularly come together to review and identify these areas that we can actually improve in the Nigeria Automotive Development Program, as well as encouraging people to really come to make some improvements happen. So this is the reason, for example, that we are really very keen on this. I think the fact that some of these policies are beginning to how do I call it now? Provide some incentives, for example, for some of these OEMs, creating an environment that allows them to be able to survive and even attract other original equipment manufacturers into the sector is also helping the economy to receive some kinds of boost. As we continue to give rebates and incentives to these local assembly people, we review the tariff incentive schemes to enable them to be able to show up the local manufacturing capacity in Nigeria. I believe that the trend can only go northwards.
Talkway TV, Logunoye, CEO, AutoCheck Africa. Thank you so much for coming on the program and enjoy your weekend.
Thank you very much, Ladi. Thanks, Viaf.
All right, now let's take a look at what's happening in the markets. We have Ini there. Well, it seems the all-share index is closer to the 47K level at this point. Quite good news.
Yeah, well, that's true, Ladi. It seems we're heading very close to that 47 that we lost, and we hope it's another, maybe by the close of trading today. We hope so, because at least we have seen sustained positive sentiments in the market now, a second day at the close of trading yesterday. So because it's 46,900 and plus.
Just a few points shy.
Just a few tens of thousands. So we do hope that if we close positive today, we'll get back to that 47, and perhaps we will stay there for a while. But let's see how the market actually traded in details yesterday. The all-share index was up 0.13%, still within that 25,000 trillion naira equities cap, and then it's all green on the activity charts there. We see that the volume 256, and value 2.62, and then we have the deals back in the 4,000 even though it had initially hit the 5,000. And then we saw that yesterday, the Fidelity Bank was the most traded stock by volume, while by value we had Airtel. But we have to know that MTN did it magic again yesterday. MTN was a major lifter of the market, a second day yesterday. Wonder what they're planning for today. Airtel and MTN, normally they bring such major moves in the market. Looking at the sectoral performance, we see that banking, even though Fidelity was the most traded, perhaps it was more of a profit taking on that stock. Banking was down yesterday, more than 1%. Consumer goods, more than 1.5%. And industrial goods, 0.03, very marginal there. Loss by industrial good. Insurance has sustained it positive. It's just not so good that the insurance sector does not have so much power to push the market to either the bearish or the bullish side, but it's been in the green for quite a while. Oil and gas was unchanged. Doesn't seem to be attracting a lot of investors, at least for yesterday. It was unchanged for yesterday. Going to the fixed income space, we see that the federal government bonds had 12 deals yesterday. I think we have Afolabi Benro now, who will take us through the equities trading yesterday. Good morning, Afolabi Benro. Thank you so much for joining us.
Good morning. Thank you for having me.
Great. So we see for a second straight trading day, the markets closed with a bullish sentiment. Are we back on track, or is this just, just a peep, and then we'll go back to our bearish zone?
I think it's more of reactions to, this is earnings season, so we're seeing a number of investors react to dividends and results as they're being announced. I don't think this is going to continue post this week. We expect that once investors sort of price in and take advantage of the dividends as they're announced, then we'll probably go back to the way things are. We still need a strong catalyst for the market for activities to really ramp up. So let me leave it there.
Okay. Then MTN has been the toast of the investors for 2 days now. What's attracting investors there?
So I think it's most likely a demand-supply thing. We're seeing a lot of demand from investors in MTN. I think a number of investors like the company, and there's not that much supply that is out there. So investors are having to sort of pay up to get stock. Even today, we've seen it trade about 935,000 shares, around 214 naira. So we expect that interest to continue amidst sort of like a lack of supply.
And then the oil and gas sector was unchanged yesterday. That's very unlike that sector. It's normally very attractive to investors.
Yeah, so I think it's mostly just, it was just a flat day for the oil and gas, like you have said. I mean, today is another day, so we'll see what happens today. But, I mean, nothing sort of majorly interesting happened in that sector yesterday.
And then insurance has constantly been in the green, even though it seems not to have that much weight to determine the direction of the market at the end of the day.
Yeah, the insurance sector is one that is, I would say it's mostly speculative. When I say speculative, I mean a lot of investors that trade there usually just try and take advantage of volatilities that can happen there. So, I mean, yeah, I don't really expect much of a change in the short term in that sector.
So what's your outlook for the trading today? Where do you see the markets closing?
So far it's been quiet. I mean, if we're generally speaking, the market has actually been quiet all week. So I expect it to probably continue to be the same. As the session goes on, we expect that interest and activities will probably pick up again. But I mean, I don't see the ASI sort of trading outside of sort of like a flat direction for today.
And then we're hoping that at least we will get back to our 47,000 points by the end of trading today. Anyway, thank you so much, Afolabi Benro, for sharing your thoughts with us this morning.
Thank you.
Yeah. So, Ladi, we'll do the fixed income, but I guess that'll be after the break.
Yeah, so Afolabi doesn't seem so optimistic about the market closing at 47,000 anytime soon, but we'll see. All right,
we'll remain hopeful.
Yeah, remain hopeful. Yeah. So, we'll take a quick break. When we come back, we're digging on the fixed income space. That's in a moment. Just stay with us. It's Business Morning. All right, welcome back. Still watching Business Morning, and we're digging into the markets right now. We still have Ini right there with the fixed income close for yesterday. How's it looking, Ini?
Yeah, well, yesterday it was also quiet in the fixed income, following what Benro said, Afolabi Benro said concerning the equities. It is also quiet. And remember, we talked about the issue of liquidity in the market. Right. We're expecting a lot of maturity in the OMO later on this year, and that should bring some more liquidity in the space, and perhaps that will, prop up investors' appetite. But let's see in details now. The federal government bonds yesterday had 12 deals. We had the December 2031 with just 2 deals there, 2 deals also for March 2025 and March 2027 too, and then January 2042, the long-term maturity security there had 3 deals, and in total it was 6.4 billion naira. That was the total value of trade in the federal government bonds market yesterday. The NTB was bearish yesterday, was bullish yesterday, beg your pardon. March 2023, that will be maturing next year, March. And those were the ones that caught the attention of a lot of investors yesterday. A whole 16 for March 2023 there, and 20 deals in all at the close of trading. CBN had just 1 deal, but I think we have Ifeoma Onyejekwe now joining us to give us, help us understand more what's going on in the market. Hi, Ifeoma, good morning.
Good morning. Good morning. Thank you for having me.
Good to have you. So market was a bit quiet yesterday?
Yes, it was. That was the result of the OMO auction. But let me start from the beginning of the week to tell you all the things that happened. So this past week was a very liquid one. We had bailout funds of 3 billion each to all the states, which came in on Tuesday, and that followed bond coupon payments of 131 billion on Monday. So money market rate traded at floor rate of 4.5%. And we also had NTB and OMO auctions this week. We had NTB maturity on Thursday and then the NTB auction on Wednesday. And then the sales was more than the offer. 112 billion was sold and 140 billion was offered. Stock rates on the 91 and 54-day bills increased to 1.75 from 1.74 and to 4.45 from 4% respectively. And on the 182-day bill, the stock rate was maintained at 3%. And following this increase in stock rates, we saw this increase having a ripple effect in the secondary market. We saw traders starting to reprice rates higher. So right now in the fixed income space, we have an inverted yield curve where the short tenor rates are higher than the longer tenor rates. We also saw special interest on the special bills, especially the close to maturity special bills, where traders were acting with bullish reactions, buying up as much as they can because of the high tenor. And at the OMO auction yesterday, 50 billion was offered and sold, and stock rates was maintained on all tenors at 7%, 8.5%, and 10.1%. And then going forward, this month, like today is the first day of April, it's a new month. We expect there to be less activity than last month because of the liquidity inflow profile. So this month in total, we expect about 551 billion compared with 681 billion, which came in the month of March. So yeah, we expect rates to trend higher in that space, but we don't expect as much activity as we have seen this month of March.
Yeah, well, we don't expect a lot of activity. And like you said, the issue of liquidity in the market is also a determinant. But help us to understand, Ifeoma, when investors get into the market, which one comes across as more attractive? Is it the longer securities, the one that will mature in a longer time? Or, the closer we get to the maturity dates, the more attractive?
Well, it first of all depends on your investment goal. So what is the reason why you want to buy a security? Is it to manage your liquidity? Is it to invest, just to have the interest payment. So it depends on your investment goal. But on a regular basis, you would have a normal yield curve. A normal yield curve is when you have the shorter tenor bills having a shorter rate, a lower rate than the longer tenor bills. That's a normal yield curve. But presently in the market, many people are going for the shorter tenor bills because the rates are higher than what is found at the longer tenor bills, which is not supposed to be the case. And that's why we currently have an inverted yield curve. But normally, many market participants would prefer to trade and buy at the longer end than at the shorter end.
Thank you so much. Certainly depends on your focus. Ifoma Yejekwe is a fixed income dealer with UBA. Enjoy your weekend, Ifoma.
All right, thank you.
So, Ladi, that's it in the market.
Right.
Investors, of course, will always depend on what you want to achieve at the end of the day. We're expecting a quiet time in the fixed income, except there's some kind of liquidity that just comes into the market, and then we see some moves. The last one was the FARC, and we'll wait for the next one, except something else happened. That's it. Thank you so much.
All right. We'll see the way the markets actually close today and see how they perform next week. Thank you so much.
And we'll still be looking forward to that 47,000.
47. Maybe sooner or later it will happen. Thank you so much, Ini. All right, now let's dig into other markets. Now we see the crypto space there. We see Bitcoin having quite a pullback this morning. Let's look at the Fear Greed Index. It's sitting at 50 points. That's neutral right now. Traders are neither afraid, or they're not afraid, and they're not in greed at this point. It's neutral. We're seeing sentiment in the crypto space at this point. Market cap, there we're seeing a pullback. It's down about 4.47%, still above the $2 trillion mark. Volume trading in total crypto space as Bitcoin plus the altcoins, $138.13 billion. Bitcoin dominance sitting at 41.35%. We see price of Bitcoin that's $44,845 per coin. We see it started to decline, struggled to stay above the 46,500 level and the 46,400 level. And we've seen that decline there to the 46,000. Support was actually broken, and traders are actually getting quite nervous at this point, seeing the way the market is actually pulling back, with Bitcoin pulling most of the altcoins down. But some altcoins are still looking good this morning. Look at Ethereum there, $3,265. That's down also 4.02%. Volume traded $19.87 billion. All right, let's bring in Michael Inaji now. Hello, Michael. Good morning.
Good morning, ladies. Thanks for having me.
It seems it's a happy Red Friday this time, and I don't know. It seems it's because of the European Union Parliament, voting to move forward a draft legislation to take all privacy out of cryptocurrency transactions. And I'm wondering, how's that going to work, Michael?
Yeah, you hit the nail on the coffin. Yeah, basically, they are trying to take the innovation out. They're trying to take the privacy out. Basically, what's going on is the European Parliament Committee on Economic and Monetary Affairs and the Committee of Civil Liberties, Justice, and Home Affairs voted on a draft legislation that basically, if you want to take out $1,000 or 1,000 euros out from an exchange, which you're already KYC'd on, and move that into an unhosted exchange, which most people will know as MetaMask, Ledger, Trezor, any wallet that's not hosted, so that's not basically running on a server that's been KYC'd, they want you to report that transaction. A little bit, a way of thinking about it is almost, this is from Brian Armstrong, the CEO of Coinbase, is think about it as every time you take $1,000 out of your bank account and you put it in your wallet, you now have to report that to the government. So it's like, this is a new technology, but it's even treated harsher than we treat the technology, which is cash, that we've had in the past. So it's a complete backwardation of how things have been going, and it's a real sign of how regulators are trying to stifle crypto. Their reason why they're doing this isn't clear, but it looks like it's going to go through. It needs to be voted on by the Parliament, the EU Parliament, the EU Commission, and the European Council. So once that goes through those three fronts, we should the law should become permanent, and we should see it enacted. But this is a huge going backwards in terms of innovation, and this isn't in the light of what digital currencies are here to bring. They're here to bring economic freedom for people. So it's as good as if I want to send 1,000 to any one of a ledger or treasure or anything, that now has to be reported to the government, which is absolutely nonsensical because the limit now is over 10,000 for any kind of report to go out to the government. So this is a huge stiflement of privacy for individuals, and it's not a welcome development at all.
Quite interesting. Not welcome, because I see that actually reflected in the market, the price movement this morning. We saw that pull back with Bitcoin and Ethereum. How are you seeing the market?
Yeah, I think the market is just going to get even weaker. We have the possibility by either May or June that the Fed actually raises, the interest rate by 50 basis points, which is, and they still have like 6 to 7 more raises this year. So the economic picture is looking even bleaker. I really do think this is just a dead cat bounce. I don't think this is actually Bitcoin trying to push to all-time highs or, break out of this economic formation that's going on in terms of the recession looming. The yield curve finally has inverted, so a recession is looming. So I don't think it's bullish at all. The Fed is tightening into an economic recession, and so anyone who tells you that risk assets are a place to be is completely wrong. I believe the best place to be right now is in cash. Yeah, I do own some digital assets, but I think a heavy cash position is one of the best tools to possess in your toolbox. Because once the recession hits and all risk on assets take a dive, I think that's when you pounce in, and that's when you take, your pound of flesh for waiting and being so patient. But, I in no means do I see this recent bounce from 38K all the way to, 48K as, a rally or a continuation of a rally for us to go upwards. I think once the Fed starts hiding rates, it's, game over for everyone.
Game over. All right, Michael, we'll see. It seems it's going to be quite an interesting weekend for the crypto market. We'll see if the sell-offs actually continue, or hopefully, the sell-offs actually end this weekend. All right, thank you so much, Michael. Always good to talk to you. Enjoy your weekend.
Thank you so much, Laddie. Have a great weekend.
All right, so that's it on the crypto market, and that's a wrap on the program for the week. Thank you so much for being a part of it and watching today. Do remember to join us at 1:30 on Business Incorporated for more updates and developments in the world of business. Thank you for watching. I'm Laddie Williams. Enjoy the weekend.